Good evening, everybody. Tonight you're stuck with me. I guess we were going to have Ron on tonight, but he had some scheduling problems. So, hope everybody's dressed warmly, especially up here in the Northeast. All right, so I was going to do a kind of a reiteration of the RARE program, the Research Analysis Reverse Engineering. And basically, it's just taking the candlestick charts that are showing us where something big is happening, and we just put common sense to it. We go back and see what it was that caused whatever was making that move. Now, we're going to be concentrating more on the electric vehicle sector. We just put out the list. I guess there's about 60 items on, or 60 different trading entities on the list, which include the electric vehicle manufacturers, as big as Ford and GM, the lithium battery makers, the lithium mining companies, and I just saw a quick report. George, it's in the members area down in the folder. But what is a duplicate? Oh, we'll add more just to get it up there. But the important factor is that we can do an easy scan each day to see if there's anything big happening. And that's the nice thing about a chat room that's all kind of looking for the same things, that if somebody sees something on XYZ, they've announced something, at least it allows everybody to quickly identify. Cheryl, yes, sir. If you're in the chat room tomorrow, we can show you how to just pull it out of there. So I was going to do this from the startup, but there's another big, okay, we'll get it to you. There's another thing that's in the forefront. Obviously, the hype that's going on with the Robin Hood and Reddit's situation. So this is what we call the greater fool theory. And I kind of point this out because Sandy came down and said, Matt, her son, just bought some shares of GameStop. And I'm thinking, oh no, what's going to happen when all the short covering is done and this thing crashes right back to $15 a share? How are you going to get out? You know, there's going to be times when they start pulling the plug, you can't even find somebody to bid. So it can be pretty devastating if you're in something that it is, Raymond. And this, I was telling the chat room, today that I was a stockbroker with Kidder Peabody in Houston when gold went from 200, where it had been trading for a long time, and spiked up to 800 in like 3 days. And what did everybody come out, all the experts tell us? That that it was going to 2,000. Now this was back in 1980 or so, and it's going to 2,000 because they couldn't find gold as much anymore. Blah 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 blah. And 3 days later, it was back down to 400, and then it went back down to 200 and stayed there for the next 25 years. So anytime you start seeing this hype, somebody was reporting that GameStop could go to 1,000, and you've got to figure, if this stock was trading right here before the squeeze went on. How much do you think this is worth once the squeeze, short squeeze is off? They're going to come crashing right back down, not only to the 20 level, but probably even further down. So anyways, with that, this is where the hand on the stove is going to be a lesson. Unfortunately, for a lot of new investors that are buying stock on their phones, and if they've got stock they own at 200 and they can't get out until 10, that will be a lesson they'll unfortunately carry with them for quite a while. So what I want to point out, even before having to go into the rare analysis, is what was actually producing some of these big, huge moves. DDD came out of this slow curve with the breakout, 45 degree. The fry pan bottoms are all over the place. When they break out, this is what's been happening. Kang today, you can see what happened after the fry pan bottom breakout, up huge. So the reason I point this out is I could probably, and I will, I got another 10, 12 fry pan bottoms that have worked or in the process of working. But this makes it very simple for the candlestick investor. If we can identify when the breakout occurs, remember there's 3 major advantages to a fry pan bottom breakout or any pattern breakout. 1, the prospects of knowing the direction is extremely good. If it breaks out, there's a high probability it's going positive. 2, the magnitude of the move is going to be excessively strong, much better than just an uptrending stock and an uptrending market. And in this case, excessively strong even when the market was trading flat. And 3, when it starts to turn over, or the market starts to turn over, usually the strength of a fry pan bottom move is going to maintain for an extra day or 2 to let you out with good profits. Now, not only does the patterns and the candlestick signals show you when it's time to get in, but it also tells you when it's time to get out. There's only 12 major signals that you have to learn out of the 50 or 60 candlestick signals. 6 longs and 6 shorts. But we know the simple rules. If you see a doji, especially a long-legged doji, in the overbought condition, that far away from the T line, what's your doji rule? It's going to move in the direction how they open it after a doji, which means that's when the profit taking starts. And because of our other indicators like the T line, when they sell it off that far away from the T line, where do you think your next target's going to be? They're going to probably bring it back to the T line. So this is not rocket science. This is just identifying what human nature does time after time. And if this wasn't a reversal signal, we wouldn't be looking at it today because the Japanese race traders would not have pointed it out as being a reversal signal. So I'm trying to illustrate this because coming from being the worst investor in the world to seeing a chart that tells me exactly when it's time to buy and exactly when it's time to sell, that takes all that emotional trauma out of your investing. You can identify patterns like the scoop. We know what the reaction or what the result is of a scoop pattern, a strong slingshot effect to the upside. So the fry pan bottoms have been working all over the place. When they gap up, breaking out, a lot of people say, well, shoot, it's in the overbought area. Remember, you're buying the signals when they're in the oversold area. You're buying the pattern breakouts usually when the stochastics tell you or show you you're overbought. So what this basically points out is if we can see a pattern setting up, we recommended BCLI because of the 2+2 analysis. 1, there's your fry pan bottom, and 2, look where it's breaking out. Right here at the beginning of the pattern, and at a level that everybody else is watching, the 50-day moving average. So what becomes our prospects of investing in something even though it's up here in the overbought area? If this is a gap up breakout, the probabilities are pretty strong you're going to see a lot more upside. So this takes us back to the rare analysis. We know that things like Tesla has gone up 700%. NIO up over 1,000%. Now, can we invest in these? Yes, but with the conventional method of our candlestick analysis. Is it doing patterns? Is it staying above the T-line? But what it really does for us is when something breaks out, Blink, for example, started at $1, and now trading up into the $45, $55 range. But there was our fry pan bottom alert, and if there was a big breakout of a fry pan bottom, worst case scenario is all we have to do is go back and say what was an announcement, what did they say, what happened here, number one, to cause the breakout, and two, is that information that's going to be strong enough to continue that breakout to continue. That's about as simple as what we're going to be going through in the training here this Saturday when we do the mini spotlight training. And it doesn't matter whether it's something that you've never heard of before or it's something like Ford Motor Company where you can see the pattern breakout. And how did this one break out? Because they announced they were going heavier into the electric vehicle area. So if we can put all our elements together, that we can see when there's a breakout, there's our double doji. The reverse engineering is what happened on that day. Now, I know the TC 2000 version, and I got to call them still, is when something happens on that day, there'll be a little, looks like a little house just below the trading. That tells you there's news. All you do is go see what the news was and see whether that's going to be relevant to your to the continued price move. So anytime we see that fry pan bottom breakout, the probabilities are going to be pretty strong that we're going to be in an uptrend. We also can use the rare reverse analysis or reverse engineering to see what the political effects might be on specific sectors. For example, you think that the solar companies would be acting better. And as we reported earlier this week or last week, that the oil sectors are getting hit because the new administration doesn't seem to be as favorable to the oil patch, obviously pushing the green energy. So why alternate energy vehicles, which I just say electric vehicles? Because so far, they've taken over 1% of the total automobile manufacturing area. And their stocks have been moving extremely well. Not all stocks are going to move well because some get overpriced because of a fast move and it's time to take profits. Others might be diminished because somebody else's announcement about their new technology may put that stock, that company, or that area of the electric vehicle area manufacturers behind. So essentially the rare research analysis reverse engineering is simply if somebody comes out with an announcement that we can identify that something big's happening because of a pattern breakout or a signal breakout, go back and see if that announcement is going to continually add to that stock. And Tesla said yesterday that we'll come up with 520-mile Model S by end of year. That I don't doubt. And that's right, Neil. so that's also kind of a where you want to use the charts to tell you, all right, what do people think about their policy against this, for this industry or against this industry, and is it cohesive yet? So, all right. And then the other area is the biotechs, because there's so much advancements and the forced advancement of the vaccine research over the past 6 months, I would imagine has led into a lot of other technologies that are dramatically being improved. So you've got companies out there that are coming up with new, I want to say, medicines, drugs, because technology is moving that fast. So you couldn't analyze by yourself, or even with a big research department, all the different technology improvements that are occurring in both the electric vehicle and the biotech area. And what we're going to be kind of concentrating on this weekend is not only identifying when something new is happening, but is that potentially going to make that stock or that portion of the sector good for a long-term hold, as well as short-term. WHI makes batteries for Tesla. Yeah, and not to get too far off the track here, but look at the technology. And I've stated this before, and this is what makes this industry kind of exciting to be looking at which stocks are going to advance the fastest. But look how fast technology is moving. Now, I've repeated this earlier a couple of days ago. Tesla had a range of 120 miles on their cars a couple years ago. Now they're up to 420 on the Model S. They figure they can go to 520. And both Tesla, meaning Elon Musk, and NIO have said that their batteries now are probably going to be pretty soon capable of going to 620 miles on a charge. The batteries are heavy, but they can be distributed at the bottom of the car, not in the front end like a conventional engine. The motors for electric vehicles are very simple. Engines, gasoline engines average 150 to 200,000 miles. They think that the electric motor for vehicles can last 1,000,000 miles because there's not very many moving parts. So these are all things that kind of fit into the same Bed Bath and Beyond, all right. All right, but that gets 320 miles on a tank of gas. And so if we know society is moving away, or there seems to be a lot of people that want to have much cleaner energy, and you've got vehicles that can now be charged up to go 420, 520, 620 miles on a charge. And, well, that's another thing too, Ronald, which will be caught or put into the factor. Remember, and I used this example the other night, remember when the flat screens came out, you could get a 40-inch flat screen for about $4,500? Well, now you can get them for $299 at Walmart. I always give the example that when I graduated from college, my mother gave me a pocket calculator, and it cost $125. And 3 years later, the battery is going bad, so I took it down to Radio Shack and said I need new batteries, and they laughed. And I said, why? What's wrong? And they said, you can buy a new calculator cheaper than you can buy the battery for this thing. And now you can buy a pocket calculator at the dollar store. So all this is again, technology. If the engines are simpler, and let's say hypothetically in 6 months from now, somebody comes up with a battery that will go 600 miles and is half the size, well, that might mean car prices, instead of going up, might start coming back down again. And so anyways, these are all just kind of hypotheticals. But the benefit of technology is that it moves a heck of a lot faster than you can imagine. A refined barrel of oil automatically produces 42% gasoline. Brent, I would think that they've got refinement, and I'm just, again, talking off the top of my head, that you can refine a barrel of crude oil in the manner of whatever you want to produce as far as the end product. I see nothing, only voice. Terms, check at the very top of your screen. Make sure you're clicked on screen sharing and not slides. That's right. You can stick the bananas in the DeLorean and biotechs and electric vehicles. The technology in both of those areas is moving so fast that if we can use our rare research analysis reverse engineering, what we basically can do is keep refining our positioning in those sectors that might be growing very strong over the next couple of years. And as I was mentioning, right now there's 1% of the automobile market is electric vehicles. There's nothing to keep, when a society keeps changing toward that area, that could be 2%, 3%, and maybe not too distant future, 40 or even 50% of the market is electric vehicles. Yeah, stock prices went up, RK, because I think if you're cutting off the supply of crude oil drilling, means crude oil prices are probably going to be higher. And I saw that the NVAX was just or I said that they reported that their vaccine is 90% effective. So anyways, we are going to be doing an in-depth analysis or study of how to use the reverse analysis, rare. Going to be doing rare on Saturday. It's about an hour and a half, but always try to give people more than what they've bargained for. So yes, so there's the link. There's the link. So with that, let me pull over these charts and we will go live. Oh, getting close here, Jim. Hold on. So in the member companies out there that are still in the startup phases, and let's see, where do I want to get to? All right, so what did the market tell us over the last couple of days? If I can get to the right charts. Told us that after a big indecisive trading, getting to be kind of a dumpling top, broke it down. And where did they break it down to? Will it be recorded for those? Yes. Yes, these sessions are all recorded. So that if you sign up for it and you can't make it, the recording we sent to you. The only disadvantage is if you had some questions you wanted to ask right at the time, you're going to have to ask it later, either in the chat room or email me. But we can see today we did a bullish Harami, showing us probably the selling has stopped. However, stochastic still heading down doesn't necessarily mean the buying has started. Could be telling us that after a flat move like this, we've seen it where it goes into another flat move like this. And the NASDAQ, which had been kind of the leader here for quite a while, it broke down. There's your hanging man doji. There's your gap down, which is telling you there's good strength in the sellers. And then today, did a doji Harami, but nothing yet to tell us there's any great strength coming into it. So what does that tell us? It tells us we probably still want to be both long and short. Now, the advantage of staying long on some of these is using the T-line. Not the advantage, but benefit. If you stopped out of NCTY yesterday, which was the logical thing to do, you would have been buying it back today on the kicker signal. So this is part of that ego crunch, or crunch, that ego part that, oh, I sold it here, I don't want to be buying it back here. That was always my stance. But now that I recognize this is a strong signal, if I sold it out here, I don't mind buying it back here because that tells me I'm back in the right direction again. So the concept of rare is that if you see something big moving, all you have to do is go to the news items and see what was causing it. And today we had no idea. I kept asking, did GBR announce something? There was no announcements. Now, should you be buying it here or here or here? Here's a very simple way to get by that or get through that decision making. I'm guessing somewhere down in here, it started up, might have been buying, wouldn't have been buying here. Might have been buying back here, and especially if I saw strength and I saw it do kind of that fry pan bottom J-hook pattern breakout, could be buying here, may not be buying here. But as long as it stayed above the T-line, you could be buying. Would you have closed it out here? Well, near the end of the day, oh, and that's the 5-minute chart. I don't even want to be there. I want to be on the 10-minute chart. Near the end of the day, if it's trading up here like this, maybe I take some profits. Well, say maybe I take some profits. If I had bought a stock at 5, 7, 9, 10, 12, and it was closing at 25, I'm definitely going to take at least half that position off. The Russell 2000. It was backing off also with the rest of the sectors, or the rest of the indexes. Had a left-right combo. Did you already say this? Yeah, left-right combo followed by a doji sandwich. And remember what we kind of call that, kind of an evening star signal, followed by a doji sandwich or an evening sandwich. We call that a Dagwood, not the bottom one is the McMuffin. And now I forgot where I was. Okay, so is this one? I don't know why I have coals on there, so I'll go to the next one. May have been KOSS. So here's one. We can observe the obvious. Back up above the T-line. So there was your breakout. Look when it was time to start taking profits, when you were that far away from the T-line. And now it's doing a bullish signal, your kind of little best friend signal, time to start buying back. The Russell 2000 Evening Star, bearish doji sandwich, or two bearish left-right combos. It doesn't really matter what you want to call it. Bearish left-right combo, bearish left-right combo. But the fact that you had sell signals and a close below the T-line probably tells you they're going to be pulling it back. Looks like there's a little gap right here, which would probably coincide with coming back down to the 50-day moving average. So obviously, one of two things are going to happen. Either they're going to be selling this off until they hit a support level, or they bounce this right around and take it back up and continue the uptrend. So which way is it going to go? I have no idea. But if we wake up tomorrow and we see the pre-market futures is showing they're still selling it off, that means we want to be a little bit heavier on the short side. Hold on to your individual ones, GG, until I tell Jim to do the double line. Morrow had the same type of signal today. It can also be bought, and I guess Morrow is part of the Bitcoin area. So you can see where you started seeing some buying on Riot. Wouldn't be buying it yet until it gets up above the T line, but it would at least would be on your watch list. We have 4 line. Please tell us about each line. Now, the 200-day simple moving average, the 50-day simple moving average. Now, the reason we have these on our charts is because every major money manager around the world uses those moving averages to make their decisions about their portfolio. We use it to see what their decisions are at that level. So a lot of people say, well, isn't the exponentials better? We're not buying, or we're not putting something on here, analysis. We're putting these on to see what everybody else's decisions are at those levels. That's what the graphics, the candlestick, do for us. This one's the 34 EMA. Works reasonably well. So the nice thing about candlestick analysis is, you see the chart isn't really all that cluttered with indicators. The black line is the 8 exponential moving average. We call it the T line because it's got a very simple concept. If you see a candlestick buy signal and a close above the T line, you can stay long until you see a candlestick sell signal and a close back below the T line. With the caveat that the further away you move from the T line, especially up here in the overbought area, the higher the probability it's going to come back and test it, which means any sell signals up here become that much more relevant. Then we've got a wee little teeny green line here. That's the 3 EMA, the 3T line. And that works in conjunction with the T line, kind of confirming that you're either too far away or that there's been a reversal. So this is trading, closed at 19 and it's up here to 22. All right, that means it's probably going to be coming. And I don't have anything on showing what Bitcoin was doing. I saw it was up pretty heavy or pretty strong today. That's a piercing signal, and what the relevance of this one is look where they're supported, right on the 50, close at the T line, piercing signal, one of your 12 major signals. Then they open up positive and trade positive. What's that tell us? That was your reversal, and it didn't resist here. That tells us we probably went like this, like this, like this, hit the reversal signal. Now you have a trajectory more like this. DJ Deb, no. I could take everything off this chart. The most important facet of candlestick analysis is the signals themselves. And everything else just becomes a confirming indicator. So just because something hit the 50 doesn't mean it's going to stop there or resist there. It's the signals that are the number one criteria for making a decision. Everything else just helps confirm why that signal is occurring at that level. So that makes not only the signals, but the patterns that much more effective. So there's your fry pan bottom breakout. Now it's setting up for a J-hook pattern, which means they've come right back down to the T-line. Now the reason that we use the T-line, or the T-line is so relevant, is because nobody has the T-line on their charts, which means every time it supports on the T-line, it's actually supporting at a natural support and resistance level of human nature. So this is the statement I always make when I'm showing new groups the candlesticks, is I tell them that if the candlestick signals are the graphic depiction of investor sentiment and the T-line is kind of a Fibonacci characteristic, a natural support and resistance level of human nature, when you combine those two, you've got an extremely powerful trend analysis combination that gives you extremely high probabilities of the direction you're going. What was this? Was the signal, the piercing signal? Yes. Which one was it? I can't even remember which one it was. SGRY. This is the signal right here. It opens below the low of the previous days and closes more than halfway up on this candle. Oh, the signal on this one, this was a fry pan bottom breakout. So that was a pattern breakout. Now the J-hook pattern is starting with what we call a left-right combo, a doji followed by a bullish engulfing signal. The T-line is the 8 exponential moving average. SPT, another J-hook pattern. This is what we kind of call the classic pattern. A fry pan bottom. What do we expect coming out of a fry pan bottom? A strong price move. A J-hook pattern. What's the prerequisite for a J-hook pattern? A strong price move. So we call this the classic because this creates that first move. There's the J-hook pattern, and what do we expect from here? If this is wave 1, we expect that same magnitude for wave 3. Jounce. Actually, yeah, that's not actually a sell signal. You can see that it wasn't a bearish. How come that thing's chasing me there? It wasn't actually a sell signal. Remember what a bearish engulfing signal needs to do. It needs to open above the previous day's close, which it looks like it did not do that slightly. So that's just a down day. That makes this more relevant that they didn't reverse. They were just pulling back with profit taking. Besides the 8 EMA on the daily chart, what chart is most important after the daily chart to close above the 8 EMA? I go to the 10-minute chart, and I'll see if I can find one to illustrate. I can. Oh, I'll have to come across one. But if you start moving too far away from the T-line, in this case you didn't really see it. It was just selling. But I'll find one that moved too far away from the T-line, which means you could move to your 10-minute chart. All right, so one of the 12 major signals, obviously, is the kicker signal, and it's the strongest. I'll have to make this huge, because right here is a kicker signal, which is it opened here and closed here to create a dark candle. I'll see if I can make this bigger yet. Opened here, closed here. The next day they gapped it up above the open and went the opposite direction. What do we expect as a result of the kicker signal? A good, strong price move. How long would you hold on to this one? Until you saw a left-right combo close below the T-line. That's when I would have probably taken profits. But now it looks like it's doing a J-hook pattern. So now you can think about going back in. That's right. Shouldn't start drinking this early in the evening. So this is why the kicker signal is so strong. First, that started, not only did it bounce off the moving averages, but that kicker signal told you there was a drastic change of investor sentiment. And then what's our trading strategy from there? You stay long as you don't see a sell signal to close below the T-line. This isn't rocket science. This is just identifying what the Japanese rice traders have told us goes on in investor sentiment. So here's another one. Kicker signal. What's this likely to do? Probably come right back up into this trend trajectory. So this one I wouldn't be afraid to be buying on positive trading tomorrow, because it's probably going to at least come back up here and even go further. And I imagine that this was done because of earnings. Micron, a little kicker type signal, not as strong as it was earlier, but I'd watch this because of the kicker signal, in this case off the 34. If it starts trading back up above the T-line, which would also probably be a function of the market itself, that's when you can start buying that kicker signal. NCTY, kicker signal today, and giving us a J-hook pattern trajectory. Does the kicker signal have to appear at the overbought or oversold? No. The kicker signal is so strong that it doesn't matter where it occurs in the trend. We've got what we call trend kickers, which occur during the trend. And we've got the bullish flutter kickers. So the kicker signal is extremely powerful, which tells you there's a drastic change of investor sentiment, and it doesn't matter where it happens. What situation would you avoid a kicker? Wouldn't avoid a kicker? Unless I was short. Let's see, do I have AFG? I've already got that one written down, so we'll get to it. If I was short and I saw something opening above the previous day's open and trading positive, close it out immediately, because that's your kicker signal. Whoops. Bike. Why do I have this on here? Oh, no. Let's see. Why did I have that in here? I don't know. Oops, I'm on the wrong grouping. All right, so here's how you put 2 plus 2 analysis together. This is DraftKings. Let me make this a little bit smaller. Look what we've got going on right here. Pretty much a resistance level. I guess it'd probably be more like this. But you're right here. Let's get rid of this one. You're right here at a resistance level. Didn't do the right one. That's just right. But this is what we call a flutter kicker signal. In this case, it's a double flutter kicker signal. Opens here, closes here. They gap it up above the previous day's open and does a doji. Did another doji. And what do we know about the doji rule? They're going to move it in the direction of how they open it after a doji. So if it starts trading positive, what do we got? We got a double doji flutter kicker. Usually it's just one doji in here, but we call it a flutter kicker because if you took these little flutters out of here, you basically have a kicker signal. Now that makes this more relevant because look where the kicker signal is occurring, right here at this resistance level. I'm sure I can draw this better. Pretty much right there at that resistance level. What's that tell us? Well, first of all, we know there's probably going to be more follow-through from a bullish flutter kicker. So if this move opens positive, it's confirming our signal. And what's it telling you about the resistance level that everybody else is watching? It's breaking through. You can be buying immediately. Well, that's just that you're probably now in a J-hook pattern, that if this is wave one, wave three is going to take you up here with an extremely strong indication of when to be buying. That's a little, yeah, that's a kicker, what I call a kicker type signal. That's really not a strong candle, but it is a reversal signal. So if I had been short, I would have covered the short position. May not be going long just yet. Could you show us STP for a wave three movement? SPT. Yeah, so if this is fry pan bottom, if this is wave one, if this breaks out tomorrow, whatever this movement was, 45, 20 points, that should probably take you up into about the $85 area. Now, will it go up 20 points? Not necessarily, but that would be the likely target. So here's, and what tells you when it's time to sell? Whether it gets to the target or not, when you see a sell signal, you start getting ready to take profits. AFG, kicker signal, right here. This opens positive, telling you this level is not acting as resistance anymore. PTC, kicker signal. Might not buy the stock, but that becomes a good option trade setup. CDE, kicker signal. If this opens positive, you could be buying. So the kicker signal, again, is one of your is your strongest individual candlestick signal. Kicker signal on higher. Broke through this level. Expect more upside. And this is setting up for a bullish flutter kicker. Pause, one of the silver companies. If this opens positive, you've got a bullish flutter kicker, which likely is going to take you through this level, which means there's your next target coming up here to fill the gap. Oh, we did the classics. Whoops. DCX. Oh, this is terrible handwriting. Maybe OCX. This is what you call the classic pattern. There's your fry pan bottom. There's your J-hook pattern setup. Just a high probability trade setup. And this Red Robin. Another. Let me make this smaller. A fry pan bottom. A J-hook pattern coming off your inverted hammer, doji, inverted hammer, J-hook pattern, more upside. So the reason I keep illustrating the pattern breakouts is because not only are you going to have a high probability of which direction it's moving, but the magnitude of the move is usually very strong. This is where that fry pan bottom broke out. Look at kind of your double doji sandwich. So Will every one of these move this big? Not necessarily, but you're always putting yourself in a position where the probabilities of being a big move is greatly in your favor. Oh, yes, I was around for that when the Hunts tried to corner the silver market. What if a breakout comes at a high? Will you wait until it pulls back to jump in? What if the breakout comes at a high? The breakout is going to be the high of that pattern, which is right here. And you don't want to see it pull back. What do you expect coming out of a fry pan bottom? A strong price move. You want to be seeing that the bulls are in control. If you see at the breakout level, this type of situation, here's our breakout level. Let's get rid of this. What do we want to see here? Fry pan bottom. Let's see it breaking out. If they're selling off at this level, what's it telling you? They didn't break out. If you had bought down here, you close out the position. It had a kicker, PTC. Oh, doesn't matter. Remember what we just said? It doesn't matter where the kicker is occurring. It tells you there's probably going to be more upside. That means there's going to be more upside. What do you think about large spread between bid and offer prices of many of these stocks now? Is it advisable to buy immediately? If you're in something that has a decent volume, your bid-ask spread is not going to be all that excessive. Now, where that becomes a more relevant infringement is in the options area. So if I'm looking at an option where they're bidding 2, asking 260, well, if I buy it on the ask side and then I have to get rid of it, I'm already down 30%. So what I will do is I'll usually put my bid halfway in between, which is where the market should be, somewhere around there. And if I let it sit there, now first of all, the $2 bid, 260 ask tells you there's probably not a whole lot of volume. So that's the one thing I want to look as far as an option trade or a stock trade. Is there enough volume to get in and out of this easily? And that's why my trading universe is usually 200,000 shares a day on average of a stock or higher. Jake, very simple. The probabilities are that this is going higher. Where would be the place that would tell me it's not going higher? If they came back through the open that told me the bulls are in control, I want to be back out. It tells me that kicker's not working. But the probabilities are pretty strong that it should be going higher. What is it? What is it? Let's see. Let me answer some of these real quick. What time length do you use when deciding what time length? Gigi, I don't understand that question. It doesn't matter the time length. If I see this opening and trading positive and I happen to see it, I'll buy it immediately. What is the very thin? Oh, this one. This is the 3 EMA. It helps kind of confirms the 3. We call it the 3T line. Confirms the helps confirm the T line. If a stock breaks in pre-market and open with a huge gap and immediately starts trading higher, what is the strategy to enter on the 10-minute chart? That if it's still staying above the T line and trading positive, you could be buying it. That was kind of the illustration of this. Do you buy it here, buy it here, buy it here? Go to your 10-minute chart and see if it's still trading above the T line. If you're using Thinkorswim, that middle is called the mid, and we'll see that when you create the order. Yes. What is a good safety stop rule when you first buy? Let's see. See if there's one on here. If I was buying on this day, it's because we saw a little kicker type signal. Let's make this big enough where we can see it. I say on this day. On this day, looks like it's starting to trade positive, and then it turns around and closes down here. Is that the one I was looking at? No, this one. So if I'm buying on this day, it should be trading higher. So where's the logical place that tells me the bears would be back in control? If they came back down to the level where the bulls started buying, it tells me the bears are in control. I want to stop out of that trade. And we can do that, Curtis, on a night in an entry and exit strategy session. How often do you think a kicker signal goes positive when coming off the T line? I don't know the percentage, but let's say the percentage is high enough, DJ, to say you don't ignore it. You want to probably be buying it. Your results are going to be much greater in your favor, like 80% plus, probably even 90%. Does it matter if the kicker is below the T line? No. The kicker signal is your strongest signal, but you want to make sure it is a kicker signal. If it's just two little bodies, that's just kind of trading. It's a big body down and then gap up above the previous day's open and goes positive. Timeline, I think he refers time frame chart. AQ, I don't even know what that means. Okay. All right, let's get on here. Where are we? I forget. The AMC. AMC. Oh, this was another illustration of a fry pan bottom breakout. So the reason I'm showing these is because this isn't happenstance. These fry pan bottoms produce extremely high probability trade setups. But anytime you see this going on, get ready to buy as soon as it breaks out. XL right now does look ugly. So we were in this, but we closed it back out when it closed back below the T line. Because what's our T line rule? Basically telling you that if you're below the T line, the probabilities are extremely strong, you're still heading lower. Oh, did we still need to do where's the kicker that I can illustrate? A kicker is where you have a dark candle. It opens here, closes here, creating the red candle. The next day, they gap it up above, at or above the previous day's open and go the opposite direction. You can see not only is there a gap here, but essentially what this illustrates is that the investor sentiment has been kicked in the opposite direction, which usually starts a very strong price move. So people constantly ask, which are the strongest signals? There's 12 major signals. There's 6 longs and 6 shorts. We've already kind of cultivated them out of the 50 or 60 candlestick signals so that you don't have to spend a lot of time memorizing all 50 or 60. If you just learn the 12 major signals, which is your ABCs, your bread and butter, your bricks and mortar, you're going to have more trades than you'll ever be able to handle. And the 12 major signals not only will produce high probability results, but strong results. So there's your J-hook pattern. Broke out through this level, told you were in wave 3. Why did I pull that one up? So polo is something that people in the chat room have been trading. Look at the fry pan bottom breakout, and then look how far away you are from the T-line when you see your first sell signal, a bearish harami. I would have probably closed out at least half the position, because what was our alerts? Look how far away you were from the T-line. Or if you're trading up here, look how far away you are from the T-line. That's when you go to your 10-minute chart and see when it starts selling off through the 10-minute T-line. That's when you can start taking profits. Why? Because the daily chart has already told you you're way up here too strong, too far away from the T-line. That's your first alert. And then the 10-minute T-line tells you when the selling actually starts. Is Disney? No, that's not what we would call a kicker signal. It's because that's not a big candle, so it's more of just kind of a spinning top bullish confirmation. You could still buy this one on positive trading tomorrow, breaking this downtrend. Also telling you the 50-day moving average was acting as support. Okay, let's see. And scroll back down. Oh, I'm losing. Okay. Uber, a kicker signal. All right, we're getting caught on the kicker signal. That is, that if I was short, I would have covered the short. I wouldn't necessarily be buying until we get to the up through the T line. Okay, and let's take a look at this one. Oh, this was to also give the example of your classic fry pan bottom J-hook pattern. But here's something that we have the benefit of witnessing. Notice the pullback is indecisive. It supports right here on the T-line, does a bullish harami telling us the selling is stopped. If you're buying, if they've supported at the 50, where do you think the next likely target is going to be? The next target, the 200-day moving average. Now, notice what it did. It stretched to get up here. So if it's stretching to get up here, meaning it took a big move to get up to the resistance level, that's where you go to your 10-minute chart. Let's see if I can do this smoothly. Where you started hitting the resistance level, then you had a little bearish harami. You might start taking profits here. You could always get back in if they came back up through that level. Because if they came up through that level, what was it telling you? They came up, hit the resistance, pulled back, and then went up through. You could always buy back. Oops, I'm still not scrolling fast enough. Neil, a couple years ago, I think it was DRYS, which was a shipping company, went from 4 to 104 in about 4 days. And then obviously it turned around and came crashing back down. When I was telling the chat room today that when I was a stockbroker, in Houston, Texas, there was a company called Houston Oil and Minerals that would go up, split 2 for 1, go up, split 2 for 1. It went up so big that the secretaries that worked for the company were multimillionaires with the stock that they owned. Unfortunately, when I got licensed and ready to buy it, started buying it, and it went down immediately from there. Did TRLY go? Now, there's some charts. Yeah, but sometimes you have, whoops, that's not what I wanted to do. Oh, maybe it is. Monthly. Okay, so at some point 2 years ago, it was up here at the 300 level. Whoops. Yep, now I've got to figure out how to get back. Okay, just a few more and then, yep, the best friend, and I can't remember what it was. So each day, because we're following the electric vehicle stocks, you can see what's happening right here now on Kendai. Now it opened and started trading positive, exactly what it should have done. So if you started buying, when it came back down through the open, that was not a good sign. Then if it opens positive, it's still telling us that this right-hand bottom is working. No sound. All right. Is that a symbol? Is that, oh my God? No, okay. Do you think it will stop at the T line or just have to wait? Well, it hit the T line. Yeah, so now you have to wait to see. So this is not a sell signal, except if I had stayed long up here, your safety stop would have been right here. If you saw it come back down through the previous day's open, that's telling you they're selling it off, get back out of the trade. But hopefully you would have been out up here somewhere. If you're long, it has to open positive and trade positive. If it opens lower, remember the T-line rule. I remember one time where a trade went in at the market of 90 and the stock was way under $10. This was when they started saying only use limit orders. Joey, I can't imagine that time where a trade went in at the market of 90 and the stock was way under 10. So you got executed at 90 and it was under 10. I would have gone right back to the brokerage firm and say, what the heck's going on here? Yeah, unfortunately, I didn't have to drive from Conroe to Houston. When I lived up in the woodlands, like now, I just worked out of the house. Thoughts on, let's wait till after, yeah, hold on to your individuals until, let's take a gander at a few that you might consider going short. So again, here's when you're that far away from the T line and you see an indecisive trading day, close out the position. They start trading lower, you definitely want to be out of the position because they're going back to the T line. TRIT, you can see the bearish J-hook pattern. That one you could go short on weakness tomorrow. VVPR, same scenario. When they gap up in the overbought condition, get ready to take profits. Now, this one didn't support at the T-line, so that makes either the 34 or the 50 your next likely target. Yeah, but if they filled you at 90 on a market order and the stock was trading at 10, yeah, there's something wrong. You have to go back to the firm and say what's happening here. Macy's, there's that big shooting star. And here's very simple. If you did stay long and saw the gap up shooting star, you simply put your safety stop at today's open, or that day's open. Flowers, big bearish left-right combo. One simple rule in candlestick analysis the Japanese race traders have provided for us is the bigger the signal, the more compelling there's been a change of investor sentiment. So this one I'd get ready to short on weakness. Something's wrong there in River City. Do your best fry pan bottom trades have the dimple? Not necessarily, but at least it gives you a measuring device to see when the breakout's about ready to occur. And it appears that there is a slight swoosh right after the dimple. I don't know which one you were referring to, DJ, but yeah, the dimple just acts like a measuring device telling you that's the halfway point. Dillard's, another one, very simple exit rule. If you see something gap up that far away from the T-line in the overbought condition and it trades up, if you're not going to your 10-minute chart to take profits, you definitely put your stop right here, because logic says if it comes down through there after gapping up, that's where the profit taking has started. And big evening star signal on TDC. Big reversal. Once again, look how far away you were from the T-line, that if you happen to have been long, hopefully you're coming out up in, what that little thing is just driving me to drink. Hopefully you're coming out somewhere up here. You're definitely coming out here. Now, if it trades lower, you can be shorting this one. We shorted, oh, I can't even remember. Etsy. Or I bought puts yesterday. And it was a bad hair day for short. It came up, but notice it failed at the T-line. So you've got a bearish engulfing signal. Your stochastics are heading down. It traded up, but it didn't do a reversal signal, and it didn't close above the T-line. You just have to kind of sit through a bad hair day like that, because as long as they don't close above the T-line, even though they've popped up, they're still in a downtrend. Richard, there's a lot that we can identify. Now remember, out of 9,500 trading entities, there may only be 50 or 100 that are at the extremes, either to the top or the bottom. Tomorrow, if Etsy continues to trade higher, I'll close out the position. Want to see it open lower and trade lower. Which other ones? Oh, we recommended going short on SOL, because when they are trading up here and they gap it down, and look at your kind of your double doji bearish flutter kicker. Next target here, next target here. Gap up and or trading above the close means trading positive. Yes, and with the also that if you see something opening positive and you're planning on buying, you don't want to see that the pre-market futures is showing that the Dow is going to open up down 200 points. Oh, David, they're there. Becky, can you type in Abraham's email? Email Abraham, and he'll get you all the numbers. Okay, I guess that's about it. Oh, that's way over time again. All right, I'll make sure he gets back to you. David, are you in the chat room during the day? What times do you do your daily webinar meetings for members and options members? Usually I come in around 11:20 in the options room for about 10 or 15, and then around noon I'll come into the main room. And it can vary 15, 20 minutes either side. So that it depends on what's going on here. All right, everybody's asking questions about different ones. Yes, if a stock remains above the T-line, even though it's waffling around, the probabilities are extremely strong that you're still in an uptrend. So even when things are bobbing up and down, if they don't close below the T-line, you stay long. How to avoid exit too early. If I go to the 10-minute chart and when I see a big spike up too far away from the T-line, then starts to pull back, like first day of BGS, like this one, or like this one. Same scenario. On this day, if you had a fry pan bottom breakout and it's moving up this far, I don't know if we're going to get the, you still go to your 10-minute T-line and take profits. Came back down. Now, what do you got going on right now? Fry pan bottom breakout. What's your expectation? Strong price move. So this one gave up profits. It probably wouldn't have shown any reason to be buying. And it closes down here. But what do we know this is? It's profit taking coming out of a fry pan bottom. If it opens positive the next day, you can be buying because that tells you the profit taking's over. In this case, you weren't up in the overbought condition. Same scenario on this day. Even more relevant that if it was up here, look how far again you're away from the T-line. You go to your 10-minute chart. I'm going to shoot that little thing. You go up to your 10-minute chart. Let's see if we can see what happened up there on the 10-minute chart. Oop, it spiked up, came up here, might have started taking profits in here. Notice this, and this is something that you'll see a lot on any chart. If you've got a big price move, the first selling, you take your profits. Because what's that first selling tell you? You reach a level where there's bulls and the bears. And then you can see what happens after that. They didn't really do too much. Yeah, you can always look at your 10-minute chart to see if it's coming back up, doing a J-hook type pattern on your 10-minute chart, you can always buy back in. I have a question about the sector electric vehicles. SOL is going down more and Kendai may be going up. Why look at Kendai? Because Kendai is coming out of that fry pan bottom. Remember, we're using the charts that even though we know we're in a strong sector, there's going to be some going up and some going down. We're analyzing which ones are which. So right now, this is a fry pan bottom. It's still above the 50, let alone the T-line. If this opens positive tomorrow, you still have your fry pan bottom breakout. Yeah, there was your fry pan bottom breakout here. How far away from the T-line should I take profit? Whenever you see that, if this is the trend, you can see there's a difference between the distance from here to here, especially up in the overbought area at the top. This is actually done, looks like, dang that thing, that's, get a gun. Looks like it's done a tweezer top, that far away from the T-line. If I was long and this started trading lower, I'd probably start taking profits just because of the distance away from the T-line. But everybody says, well, what percentage? No percentage, just visual. Are you too far away from the T-line? Okay, are there any general questions on candlesticks? Joey, did I answer your question well enough? Again, the bull kicker doesn't matter where it's occurring. Can you review what a kicker is? A kicker is two large candles, a large candle and a large candle. If this was a wee little teeny doji, then it's not a kicker signal. It's a best friend signal. Second strongest signal, there isn't any second strongest signal. We've already narrowed down that the 12 major signals, all 6, the doji, that should be your first lesson of self-teaching is, and if you want something that's pretty concise, pick up the book, the second one we wrote, High Profit Candlestick Patterns. That will show you the strong signals and patterns, and that's kind of the meaty one. April, there's a link where you can buy the video recordings on our site of the 12 major signals. And that should be number one on any candlestick learning, is if you don't know the signals, then the patterns and confirmations all mean nothing. The first criteria is identifying where the signals are occurring. Does the color of the first candle matter when using the kicker? Yes. Yes, this is a red candle. Now, if this had opened here and closed here, that becomes a belt hold. Can you review AL again? That's a kicker type signal. Now, a true kicker doesn't have a tail to the upside or a tail to the downside. It's still a kicker type signal because it's telling you there's a change, but it's not a strong kicker signal in the sense that this wasn't a huge candle. Now, if it had been a red candle that size and a green candle that size, yeah, that tells you there's a different change. It is still a kicker type signal that if I had been short, I would have covered the short, but I wouldn't be going long until I see more bullish confirmation. What if the first candle is green, then it becomes in this case, a belt hold type signal. On SD Lauder's short, your safety stop would have been right here, because if they had enough strength to come up through there, where do you think their first target was going to be? Up here to the T line. AFG, that is a true kicker signal. A big candle and a big gap up and a big candle going the opposite direction. If I see this opening up and somebody in the chat room says, oh, look at AFG, it's trading gapping up, and I see that it's doing a kicker signal, I'm trying to buy as fast as I can. If I don't see this until tonight when I do my scans, I'm going to buy in positive trading tomorrow. The kicker signal is stronger because it's changing investor sentiment. Because investor sentiment was going in this direction. Then it kicked in this direction. If this was a belt hold, it would still be a buy signal, and it would be bullish confirmation. It'd still be strong, but not as strong as what the kicker signal would indicate. Okay, Jim, let's go ahead and do the double line. And now I got to see. And in 2.6 seconds, do the next double line. How did you overcome the fear of buying the overextended stocks when they have these strong signals? Many times they can trade positive and pull back on you. Definitely. What was the one that somebody, let's see, which one was it? And we'll go through this on a members night. So here's our bobble breakout. We recommended APT on positive trading today. So it gapped up. But then what did it immediately start doing? It started selling off. When it started selling off, what color candle were you getting? A red candle. And what did that indicate? That they were selling. So we wouldn't be buying until when? Until it came back up through that open. In this case, even though it opened positive, it never let us in because it never showed us the sellers were there. I'm sorry, the buyers. Let me see if I've gotten everything here. All right. You were early on Hecla. Hecla is a best friend type signal. A doji spinning top gap up off the 200. You can buy this on positive trading tomorrow. So I should reiterate that once you learn what happens in specific signals and patterns, now at least you have control of your own emotions to know when to be buying. IGMS, fry pan, not really, no. IGMS, that's kind of a nothing chart right now. Wouldn't be long or short. It says ConAgra. That's a very kicker type signal because you do have a shadow up here. But what's it tell you about the bulls at this point? They're not in control. If you're in an uptrend and they gap down below the previous day's open, you close it out immediately. Pretty much tells you the bears have taken control again. FUVs, just stay long. PGEN just keeps waffling around. But after hours, it was trading back up. But you have a buy signal, bullish confirmation at the 50. It's basing here. So remember what indecision is. That's a one-day indecision. This is indecision going on multiple days. But you can see the stochastics are slowly coming up, and they keep supporting off the 50. I'd still be a buyer of this one, especially if it now breaks out through this level. Yeah, I would get out of this one if it traded lower and closed lower below the 50 tomorrow. That's not what I wanted. This one got kind of a fry pan bottom, but it's still nothing exciting. Oh, this was a bearish candle day. I would have been out of this one today. Thought that was a green candle. I'm slightly colorblind, which makes it with reds and greens, which makes it pretty bad when you're driving and they've got the stop signs in front of a evergreen tree. But this one's a nothing chart right now. I'd be out of this someplace else. Silver, that's what the, I guess the Robin Hood people were going after. Right now, the silver contract for March is trading positive. So you can see kind of the cradle type pattern here. You can still be a buyer of this if it opens positive and trades above today's open. XPEV, we closed out a couple of days ago because it closed back below the T-line. Remember, your uptrend remains in progress, but when it opened lower after that doji, what was our doji rule? Was it going to trade lower? Told us we wanted to be out. Doesn't mean we're out of it forever. You wait for it to do a buy signal and come back in. Above support at the T-line? Yes, you can see that. Would you have had a reason to be in NVAX? No. It was doing a slight fry pan bottom, but it was junky. I wouldn't have paid attention to it until it traded there, and I think after hours, was it up about 20 bucks? Because they announced that their vaccine was 90% effective over in the UK. So that would have been one that you really wouldn't have been expecting just yet. But now that it's gapped up, now you might look at it for a buy. Fun? As long as it stays above the T-line, you stay with it. I'd use the T-line as your stop. And LRCX stays short. GM is backed off. Tried to do some buying today, but still didn't do anything good. Right now, I wouldn't be in GM until they can get it back up above the T-line. And that's probably one that we'll be discussing this weekend as being maybe a long-term hold again, which is hard for me to say because it's been years that I thought GM would be a buy. A, B, N, D, that's your bearish engulfing signals in the overbought area. If this opens lower tomorrow, you definitely want to close it out. And Lockheed stays short. Notice your kicker type signal right here. But what did that kicker type signal tell you? That your T-line was still acting as a resistance level. Drop box, hold as long as it stays above the T-line. Yes, but you've got a bearish Harami. It's not a great looking chart. Big move up. If this opened lower, I'd close it out, and I probably wouldn't pay attention to it until it gets back up through that level. And ENTP, only because that's a sideways chart. This one you can stay long as long as it stays above the T-line. Netflix, like the biggies right now, they're not, I wouldn't be long or short this one. The biggies are having a hard time getting any major direction. Apple, Amazon, they're all sideways. Wouldn't be trading those. We did silver. And Pixie, another one. with the shooting star and then opening lower, I would have closed it out with the expectation they're bringing it back to the T-line. And I wouldn't be ready to buy it back. Well, you could buy it back if it starts trading positive, especially above this open. But it'd be more aggressive if it comes back up through the 200, which is basically telling you you've got your bobble breakout. And Genius, here's another example. If you've got a big price move and they open it lower the next day and start trading down, close it out. You can always buy it back if the profit taking ends and then they bring it back up through this level. But right now, I'd be out of this one because you're right back into the range before the breakout. Trade desk, nothing. Would not be long or short. There's no direction. You've got a little morning star signal, but you still have no direction. It's still not a good looking trading stock. Shouldn't we set a stop limit just below our buy in a price so our losses would be minimal? I never set a stop limit because let's say you bought a stock at 50 and it started moving up and you set a stop limit at 50. Well, then it came back down and the last trade was $50.04. The next trade was $49.98. They couldn't sell you at 50 because nothing traded at 50 and it kept right on going. You set your stop at 50. So if it hits 50 or below, then you close it out. Because it doesn't matter whether you close it out at 50 exactly or at 49.94. You want to be out of that trade. Twillo, nothing here. I wouldn't be long or short at this point, and I wouldn't be going long until they can get it back up above the T-line. Hecla, you can buy on positive trading tomorrow. Ride, another one that's moving sideways. Lost its energy up here. I wouldn't be long or short this one. Where should I buy after a kicker signal? On positive trading, meaning a positive open. GameStop, Lisa, I don't know what to tell you there. The bad news was that Sandy told me her son bought some GameStop today. And I'm thinking, oh man, a stock that's gone from 20 to hit a high of 500 and it's trading at 200, where do you think it's going to go? So when he called me to ask me what to do, I said sell it because now you're just in a crapshoot. You're hoping to take it higher, but look at the range today. You could have been buying anywhere in here and it was down here. What would you have done? So this is where maybe you could have bought down here when you saw there was some sort of buying going on and hopefully been stuck in it up here. But if I could buy a stock at 20, which I've never been able to do in 40 years of trading, and be able to get out a week later or 2 weeks later at 250, I'd just be happier than a pig in doo-doo. I've just never had that opportunity. Adobe, another one that I wouldn't be long or short. If I was short, it has to open lower and trade lower tomorrow, but right now that's a sideways chart. And PRGS, bearish J-hook pattern, I would suspect. This is what they call a blue ice failure. You can see the bearish kicker signal. They fell through the ice, the 50-day moving average. They came up to try to find the hole they fell through. This is the description my late friend Dave Elliott of Wall Street Teachers came up with. They drowned. Where are they going? They're going to the bottom of the pond, or essentially a wave 1, wave 2, wave 3. Yes, so you could go short. And net, another one that if you had been short, you would have covered the short today, and right now I wouldn't be long or short on that non-directional trading. That's not what I wanted to do. Coop. Another one that if you were short, you would have covered the short today, and you wouldn't be long or short on that chart. That's if you, yeah, nah, I'd be someplace else. We did gold. Gold was kind of relatively lethargic. Wouldn't be trading anything associated with gold right now, just because there's no direction on the gold. And there's a breakout. There's your best friend breakout. Figure your 45 degree will remain in progress. Phil, he does very good estimates. Yep, so got to be careful of what they go after, because when the price starts moving around based upon a aberration of supply and demand, you don't know, you don't have any control of where it's going and when they might pull the plug. KSPN, that's kind of your J-hook type pattern. You could still be buying this one on positive trading tomorrow, and then just use the T-line as your stop. Fuel cell, as long as it stays above the T-line, you're all right. I don't know what this line is, so we'll move it. Kind of your J-hook pattern in progress. Did we not do ENPH? Yeah, another one that I'd be out of short, but I wouldn't be long. OEG, there's your, you can see how up here in the overbought area, it was time to take profits. And where did they almost take it to today? Right back to the T-line. Right now, I would be out of this one. Wouldn't be, yeah, if they open this one lower, you definitely want to be out of it. Marna, stay long. Use today's open as your stop. American, that's your message. But again, it's hard to analyze on this because I think this was one of the ones that the Robinhood people were going after. Same thing with Naked. My brother called this morning and said, oh, we're looking at buy Naked. This is one of the ones. So he bought it up here somewhere, and as you can see, it's trading down here. These are just, yeah, you don't know when they're going to pull the plug on some of these. Now, everybody keeps asking about this one. There's nothing, yeah, you wouldn't buy this one until it gets back up to the $8 range. And XONE, it's time to look to take some profits because there's your gap down below the previous day's open. They're having a hard time taking it up. If this one opens lower tomorrow, they're coming back to the T-line. So no, get ready to take profits. You're in the overbought area and you're starting to see shooting star type signals. IPOF apparently does not come up over here. Fiverr, another one that if you were short, you would have covered your short today, but you wouldn't be going long until they can get it back up above the T-line. And Square, a morning star signal, same scenario. I would have covered any short position today. You can go long if they start trading this one positive. Space, another one with that long-legged doji. I would have taken profits today, especially when it came back down through here. I'd still think now you're in kind of a danger zone of overbought and the sellers starting to come in. I would think it's going to come back and test the T-line at least. And ABNB, big bearish engulfing signal today. This one you also have to be shorted on a lower open, I would want to make sure that it's coming back down. Notice that you've used the T-line as a support level, so you still have to see it close below the T-line. Netflix we did, right? Netflix. Right now wouldn't be long or short. BLCM. You say it's up here somewhere. Yeah, there's nothing you could do. So that you would look at to see what the announcement was, whether it was earnings or something, to see why it moved up to that level. CDEV. You can stay long as it doesn't close below the T-line. Jemiah. Whoops. You're starting to get toppy up here. I'd be ready to take profits if it trades lower, and then again, watch to see what it does at the T-line. QEP. I probably wouldn't pay attention to this one until they can break out into new high territory. Will this show up over here? Oh, soybeans. Yeah, they were trading it lower. Right now, this is the March contract. They started selling it off here. I'll be shorting it if it comes back down through either yesterday or today's daily close. So this is where I use the 10-minute chart. Whoops. I usually trade off the 10-minute chart. So we made some good money on this trade right here. But as you can see, after the big move, it's basically moving sideways. And I got to go back to the regular charts. So somebody said we want to do a session on trading futures. So it's trading back up here. I don't know who could be left to be buying this, but could this like closing a gap? Nick, I don't know which one you're referring to. Show the 10-minute chart on game. Stop. I don't know if it's going to show after hours. It won't. Blue ice looks like a kind of reverse. Yes. Well, but a bubble breakout is when it comes up to the resistance level. It's also like a bearish J-hook pattern that uses that as a resist, as the bullish side uses the support level. What system are you using right now? This one is called CQG. It's the grandfather of the charting services, but it's about $1,400 a month. Either use Metastock or DJ, that's just great, or TC2000 for your scanning softwares. They're easy to set up. Can you give your favorite or best stock picks for the session? Neil, usually I could. I'm still liking BCLI because of the fry pan bottom, the breakout, and the fact that there's a big gap area, which makes this a likely target, or pretty much a 70% upside. Fucell was up, still trading positive. You stay long on this. And for some reason, iPuff does not come up over here. I don't know why. It comes up over on TCNet. Oh, somebody did BCLI, yes. That one's still in progress. And This one, you stay, or you can be buying this one on positive trading doing a J-hook pattern. NIO was trading up a little bit today, but nothing yet until they can get it back up above the T-line, and then I'd be more apt to buy it if it can break out through this little resistance level. Wayfair, you stay short on this one. Yeah, so that's why you just have to watch out, because you got the other side of the coin. If you're an institution and you own a lot of this stock and they're running it up for you from the 30 level up to the 50 level, you might have a lot of people in Robinhood that are buying 100, 200, 500 shares. You might have an institution ready to sell 2 million shares. So you always have to watch to see who's going to be in control. Janik, that one won't come up over here. If it does, I can't pull it up on this system. And Fubo, I guess they announced a new offering. So it's come back to the T-line. It has to open positive to stay in it. The T-line will be the important factor on this one. Williams-Sonoma, that's another one that you would have stopped out with it coming back down through the open of yesterday, showing you there's weakness coming into it. Nike, now you have to see whether, if you stayed with it, you have to see whether it can stay above the T-line. Nike, you stay short on this one. American Express, if you were short, you would have covered the short, but you wouldn't be going long. Nick, I don't know what you were referring to now as far as GME. So, do the contracts expire in the morning or after hours for GME? Oh. Tomorrow, if they expire on Friday, it'll be tomorrow at the close. MYOV has a good looking chart. I've been looking at this and I don't know why I keep missing it to recommend it, but you can see the little best friend gap up. Now it's through the 50. You can stay long on this one. Not too late to get in, no. There's probably some more upside. Yeah, this afternoon when Matt called me, he said he bought it at 210. And I'm thinking, oh man, if they crash this, there's no way to get out of it. So he had some sort of app on his phone where he could sell it after hours through Thinkorswim. And at that time, it was at 255. So, all right, I guess we've got most of them. And remember Saturday, again, these are our mini sessions. They're not very expensive, but you'll get a lot more. Was GBR due to Reddick? Okay, because we didn't see any announcements on why it moved like it did. Yeah, GameStop up there at 312. All right, everybody. We'll see you bright and early in the chat rooms tomorrow. We'll see you then.